All right, let's talk about health insurance, an industry that already sounds like a dystopian sci-fi plot even without the added layer of corporate tragedy. But buckle up, because we're diving into a story so wild, so monumentally ill-advised, that it makes your average insurance claim denial look like a friendly game of patty cake. We're talking about a CEO, a company whose greed is more evident to the consumers, and the ripple effect that's about to hit your portfolio like a rogue wave. This isn't just about one bad apple, oh no. This, my friends, is about the systemic issues festering beneath the surface of an industry we all rely on, whether we like it or not. So grab your antacids and your thinking caps, because we're about to unpack this mess and, hopefully, emerge with a slightly better understanding of what it means to invest in a system that seems hell-bent on self-destruction. Now, I can't reveal all the juicy details just yet. Lawyer stuff, you know how it is, but let's just say this particular CEO decided to take team building to a whole new level. We're talking about a level usually reserved for those what not to do training videos, the ones where someone inevitably sets fire to the break room microwave. Imagine, if you will, a company retreat. Sounds harmless enough, right? Maybe a trust fall gone wrong, a few too many margaritas by the pool. But no, this was different. This involved, well, let's just say it involved a lot of questionable decisions, a distinct lack of clothing, and enough incriminating photographic evidence to make a cybersecurity expert weep. The stock price, as you can imagine, will react accordingly. Picture a roller coaster enthusiast who just discovered the ride they're strapped into was designed by a committee of pigeons. That's the kind of nosedive we're expecting to talking about. Public perception too went through the floor. Suddenly the company that was supposed to be safeguarding your health couldn't even safeguard its own CEO from himself, really. It was a PR nightmare wrapped in a dumpster fire, sprinkled liberally with the faint scent of regret and cheap tequila. Now you might be tempted to dismiss this whole thing as an isolated incident, the ramblings of one gloriously misguided individual. But that, my friends, would be a mistake. Because this isn't just about one CEO's tragic fall from the industry. It's about an industry that's been teetering on the edge of chaos for years. Think about it. Health insurance premiums are skyrocketing, deductibles are higher than ever, and good luck finding a doctor who actually accepts your insurance without making you fill out enough paperwork to rival the Library of Congress. This CEO's antics, as entertainingly disastrous as they are merely a symptom of a much larger disease. A disease characterized by a lack of transparency, a disregard for basic human decency, and a profit-driven mentality that would make even the most hardened Wall Street tycoon blush. And the regulatory bodies? Well, they're like that friend who always promises to call you back but somehow never quite gets around to it. They're aware of the problem, sure, but they're too busy accepting campaign contributions from the very industry they're supposed to be regulating to actually do anything about it. So what does this mean for investors? It means buckle up, Buttercup, because things are about to get bumpy and consumers are about to act crazy. The market, as you might expect, reacted to this news with all the grace and subtlety of a startled gazelle. Stocks are about to plummet. Analysts went into full-on panic mode, and everyone who had ever dared to utter the phrase long-term growth in relation to this company suddenly found themselves in desperate need of a stiff drink. Experts, bless their cautious little hearts, were quick to offer their 2 cents. Unprecedented, they cried, a clear sign of systemic risk. And they are not wrong, of course. But it's always fun to watch them state the blindingly obvious with such an air of profound wisdom. Investors, meanwhile, will be left to pick up the pieces. Some still will be reeling from the shock, clung desperately to their shares, hoping against hope that this was just a bad dream, that their portfolios shouldn't be the ones left wearing the lampshade come morning. Others, wiser and perhaps a tad more cynical, will cut their losses and run for the hills, muttering something about investing in companies that didn't involve public nudity and potential violations of international law. The takeaway? When a CEO's idea of a good time sends the stock market into a tailspin, it's probably time to reevaluate your investment strategy. A history of bad decisions. This will not be their first rodeo. Now, you might be surprised to learn that this will not be this particular company's first foray into the wonderful world of questionable decision-making. Oh no, this is an organization with a long and storied history of shooting itself in the foot, then reloading and aiming for the other one. Remember that time they decided to deny coverage for a life-saving surgery, claiming it was experimental, even though it had been endorsed by, you know who, the actual medical professionals? Or how about that delightful period where they were caught red-handed inflating their earnings reports, making Enron look like a bunch of amateur hour grifters? Yeah, this is a company with a track record of pushing the boundaries of ethical behavior, then tap dancing over those boundaries with the reckless abandon of a toddler on a sugar rush. And the stock? Well, let's just say it's been on a wild ride. Imagine a donkey on a pogo stick trying to navigate a minefield. That's the kind of volatility we're talking about. So why would anyone in their right mind invest in this hot mess of a company? That, my friends, is a question for the ages. The health insurance Hunger Games. May the odds be ever in your favor. They won't be. The health insurance industry is like the Hunger Games, fighting for your money. The competition is fierce, with big players more focused on market control than coverage. Smaller companies struggle against bureaucratic red tape. Consumers are caught in the middle, facing high costs. This recent CEO tragedy will disrupt the industry, like an aggressive badger in the arena. Experts predict mergers and acquisitions, while others foresee a regulatory crackdown. The health insurance landscape is about to undergo a seismic shift. The future of health insurance, hold on to your hats and your wallets. So, what does the future hold for the health insurance industry? If I had a crystal ball, I'd be on a beach somewhere sipping margaritas, not talking to you fine folks. But alas, I can only offer educated speculation and a healthy dose of cynicism. This CEO's antics, while undoubtedly entertaining, have shown a spotlight on the deep-seated issues plaguing the industry. And while I'd love to say that this will lead to meaningful reform, I'm not holding my breath. The most likely scenario is that things will continue to bumble along as they always have. Premiums will rise, coverage will shrink, and health insurance companies will continue to rake in record profits while providing the bare minimum in actual care. However, there is a glimmer of hope. This tragedy, coupled with the growing public outrage over the state of healthcare, could be the catalyst for change. Perhaps lawmakers will finally grow a spine and implement some much-needed regulations. Maybe consumers will finally reach their breaking point and demand better. Or maybe, just maybe, a bunch of rogue hamsters will escape from their cages, infiltrate the headquarters of every major health insurance company, and chew through all the wiring, bringing the whole system crashing down. Hey, a girl can dream, can't she? Investing in health insurance. A guide for the perplexed and slightly terrified. So you're still interested in investing in health insurance? Well, I admire your bravery, if not your sanity. But hey, who am I to judge? Maybe you enjoy living on the edge. Maybe you have a thing for risky investments with questionable moral implications. Whatever your reasons, here's what you need to know. First and foremost, diversify, diversify, diversify versus agreeing with deny, defend, depose. Don't put all your eggs in one basket, especially if that basket happens to be woven from the shredded remains of a CEO's tragic loss. Second, do your research. Read up on the companies, their financials, their track record, and their political leanings. Knowledge is power, especially when it comes to navigating the treacherous waters of the stock market. Third, be prepared for anything. The health insurance industry is volatile at the best of times, and this latest tragedy has only added fuel to the fire. Expect the unexpected and always have an exit strategy. And finally, remember that investing in health insurance is not for the faint of heart. It's a high-risk, high-reward game, and there's always the chance that you'll end up losing your shirt and possibly your sanity in the process. But hey, if you're feeling lucky, go for it. Just don't come crying to me when your portfolio is in the toilet. Health insurance stocks, don't say I didn't warn you. So there you have it. The wild, wacky, and often downright depressing world of health insurance stocks. It's a roller coaster ride of emotions, fueled by corporate greed, regulatory incompetence, and the occasional CEO decisions to please their shareholders and fatten their pockets. But hey, at least it's never boring, right? If you've made it this far, congratulations. You've clearly got the stomach for this kind of thing. Now, if you'll excuse me, I'm going to go pour myself a stiff drink and try to forget everything I've learned about the health insurance industry. Oh, and before I forget, be sure to share your thoughts on this whole CEO tragedy in the comments below. And if you're feeling particularly adventurous, check out my next video where we'll be exploring the exciting world of investing in companies that actually make the world a better place. Spoiler alert, they're few and far between.